Hello everyone, today's video is all about SDLT, stamp duty land tax, particularly as it applies to limited companies that purchase residential property. So few pitfalls to look out for. Let's just overview of the current rates. So if you are buying a residential property in a limited company from the 31st of March 2021, so after the temporary relief, the SDLT that's currently in because of the COVID. So assuming you're buying it after that temporary relief finishes, then the rates of SDLT that you'll pay if the property is costing less than £500,000 are as follows. The first 125,000, it's at 3%, then 125,000 to 250,000, that slices at 5%, and then finally the slice between 250,000 and £500,000 is 8%. So these are additional to the normal SDLT rates for residential properties that would have applied if you'd bought it as an individual. So there is this 3% surcharge that applies when you buy residential property in a company. However, you'll see some of my other videos that there's other tax benefits that more than outweigh this 3%, and it's generally a lot worthwhile to have residential property in a company as opposed to holding it individually. But anyway, coming back to this SDLT rates, what if the property that you buy is worth more than £500,000? So if the property is worth more than £500,000, then the rate jumps up to 15% on the entire amount, not just 15% in excess of £500,000, but on everything. So you can get relief from that 15% if various things apply. Now, the main thing that would apply is if you are operating a property rental business from the company. So you are letting the properties. If you are doing that on a commercial basis, then the 15% doesn't apply. If you are a developer, so you are developing residential property in the company, again, that 15% won't apply. And there are various other exemptions, but they are the main two. Property letting, property developing, you won't be hit for the 15% charge. The thrust of the legislation says that essentially you are caught if the property is let to a connected person. That's what bites for this 15%. So assuming you have these exemptions for letting or developing, what are the rates? Well, the rates up to 500,000 are the same as it was if the property cost less than 500,000. Then that 8% band is extended to 925,000, and then for the amount of consideration in between 925,000 and 1.5 million, that's at 13%. Then anything over 1.5 million on the purchase price, that is taxed at 15%, just the incremental amount over 1.5. So they're the bands, they're the rates if you do qualify for the relief from 15% of the full amount. But you need to be careful, because what else the legislation says that you have to meet these conditions, these exemptions, for 3 years post buying the property. So let's say you bought a property and it was in excess of £500,000, so it cost 800,000, and you let it out on a commercial basis. So you let the residential property out within the company, and then 2 years down the line, let's say for some reason it was decided to let it to a relative of one of the director shareholders of the company, that would negate the exemption from the full 15%, and HMRC would claw it back retrospectively. So you've really got to watch out for changing any of these exempt activities within 3 years of buying the property. There was a recent court case, just want to give you an overview of this, 2019, concerning a business which provided carers and nurses to people in their own homes, and they basically bought a residential property. They bought a residential property, did this company, and what they did was they rented it out for new members of staff. New members of staff had to go on training courses before they were put into these people's homes to care for them. And the company said, okay, but while you're on these training courses that we will also provide you with accommodation in a property that we've bought, but you pay us some rent for that, and we'll give you breakfast and fresh linen and everything else. So the company claimed the exemption from the full 15% SDLT because they were charging rent to their staff members who were staying in the property whilst they attended the training course and until they got their own accommodation, because a lot of them came from overseas. HMRC inquired into the SDLT return and said, no, you can't do that. The reason they challenged it was because they said that the purpose of buying the accommodation was not exclusively for a property rental business. It was also in the furtherance of the trade of their business as carers or providing care services that they acquired this to enable their staff to stay somewhere whilst they were trained up to then go into the homes of the elderly. So this duality of purpose is what they said in the tax tribunal, that it wasn't just exclusively to rent out to third parties, but there was also a business purpose to make their business improve by having the staff stay there whilst they were trained up. And the company's appeal was thrown out, and basically HMRC slapped them with an extra £100,000 of SDLT, which was confirmed by the courts, because they didn't because they didn't qualify for this relief. They claimed it, but they didn't qualify for it. So do look out for that as well. So if are you sure that you are genuinely operating a rental property business on these properties that cost more than $500,000 to get the rate right down from 15%? It has to be a genuine rental business to a third party, nothing to do with connected to individuals, have anything to do with your company. Because on the face of it, that case with the carers looked like it might be okay if they were charging a commercial rent. Yes, there were to people that work for them, but no, the judge threw it out because of this dual purpose of acquiring the property. So be mindful of these little pitfalls when you are buying properties, residential properties in a limited company, particularly those costing more than $500,000, because what you don't want is that 15% to apply to the whole consideration. Yes, there'll be 15% on the excess of 1.5 million properties, 1.5 million costing properties, but we're talking about 15% on the whole amount, which you could get stung for if you don't get it right. So it's obviously hugely expensive, and that could, coming back to me talking about the other benefits of residential property limited companies, that could negate the tax savings to be had elsewhere on the income streams and everything else. So whatever you do, try and avoid that 15% SDLT rate. So that's just an overview on SDLT for residential properties in limited companies. If you like this video, please do subscribe here, and I will see you soon.